Ladies and gentlemen, dear friends, let me start by a very personal note, which is that I wanted, on behalf of all of you, to welcome very warmly here Ambassador Bob Mandel, who has joined us today. We all know he's a big fan of the ICT sector. He's one of the architects, I think, of the transatlantic ICT community, at least so far as Luxembourg and the US are concerned. We're very fortunate to have you. And unlike many ambassadors, Bob, you're just not coming in and leaving, but you're staying to listen. Thank you very much. Dear friends, actually I have a chair, but John is sitting on my chair, which doesn't come as a big surprise to me. And so hopefully I will be somewhat successful in my role as moderator, and one of my main challenges will be to keep John away from moderating this panel. Whilst I'm speaking about you, sorry, you were talking about a new kind of social contract, and I wanted to bring the new social contract a little bit down to earth for the next half hour and talk about regulation. And obviously at the end of the panel, everyone can make up his own mind on whether we have added some clarity or whether we have contributed in creating more confusion. That is basically up to you. And my first question, and since you have been addressing this, Michael, in your speeches about regulation, and you were talking about regulation through a bank, together with the bank, but you were at the same time talking about regulation as a payment institute. So my first question really goes to you, and shall virtual currencies be regulated, or shall they stay outside of regulation? Which is a very simple and straightforward question. We know what part of your answer is going to be, but please.
Yeah, so do you hear me there? Yeah, it's fine. So I of course think they should be regulated. It seems kind of crazy that we have a setup today where we're running an exchange for the euro part. We need to have a license but for the pure Bitcoin part, we could essentially run away with people's money, and there would be no regulation covering that. It would be a civil lawsuit afterwards, and it would be pretty hard to administer. So of course, people, if you are holding money from other people, and that goes for Bitcoin as well, you should comply to some kind of regulations. And I think the existing regulations for that purpose are probably pretty okay. When it comes to Bitcoin as terms of inter-exchange, they very much work like cash. So any kind of regulation we have around cash, that also goes for AML and other things, would be perfect there, but it would also mean that a lot of transaction needs to be documented and other things. So we expect these things to come, but I think it's also the right direction to move.
That means a regulation basically in the interest of the consumer. Since we're fortunate enough to have a representative of Ripple also, Karen Gifford, she spoke yesterday, but just wanted to introduce you briefly. She's the Chief Compliance of Ripple. I wanted to know what your views on the same question were, regulate or not regulate, and which bits are to be regulated.
Do you hear me? Yes. My background, as you know, Jean-Louis, is as a former regulator. I worked at the Federal Reserve Bank of New York for quite some time, and my intuition and instincts are that anything that is fundamental to exchange needs to exist in a framework of laws and regulations. I see regulation as inevitable and a good thing. I also think that from my current perspective of somebody who's at a company that uses a technology that contains a virtual asset, there are many, many benefits to regulation. If there are clear rules, there are so many practical decisions that come from knowing what the rules are, and in an environment of great uncertainty, which is where we find ourselves now, it's very hard to make certain very practical business decisions. So the advent of regulation seems to me to be a very positive.
So there seems to be consensus that the community as such is advocating in favor of regulation, which is quite in contrast to what we hear from banks these days, because they're complaining about too much regulation. And in that context, I wanted to ask Stan, what should be regulated, what should not be regulated, what can be regulated, what cannot be regulated, before turning the floor to Nadia, who represents the regulator here. So you're speaking on the control of the regulator. I just wanted to.
So I think that's a very good question, and it comes down to a couple of points. One is that there's actually a very wide diversity of assets that are emerging, and unfortunately, something that could be applicable or even enforceable for one type of asset is not applicable or enforceable to another type of asset. So while I would agree with my two colleagues that some form of regulation is necessary and needed and helpful, especially in terms of guidance, forward guidance. On the other hand, I think it's important to understand that there are two things that we don't want to crush. One is the spirit of innovation that is around these assets, where a huge amount of wealth and prosperity can be created if they're given time to bake, time to form. On the other side, I would say that we have to be a little bit careful that we don't set up a structure which leads us down a rabbit hole where all of a sudden everything is being regulated. And this kind of goes back to my point. If we're living in a world where all of a sudden, say, you have digital apples or some form of apples that can be traded like a currency, do we all of a sudden have to regulate apple farmers the way that we're regulating a bank? And the regulators that we've spoken to have been adamant that they don't want that, mostly because it's a huge amount of work and risk for the regulator themselves. So there has to be a kind of balance between the approach and this kind of perspective. And I think that some of it comes down to, are you a good guy or a bad guy? And I'm going to credit Karen with this, because we were talking about this idea at dinner last night. And you know, if you're a good guy and you're trying to do the right thing and you're trying to create value in the economy, hopefully there can be a little bit of room to figure out how these technologies can best become self-sustaining and self-regulating. So that there are, you know, the Open Audit Initiative, there are other things that are coming that are going to make the regulator's job very easy without having to do very much. On the other side, if you're a bad guy and you're out there trying to money launder or you know, get around OFAC or do things that are just not in the interest of anyone other than yourself, then you know, you need to really try to stop those types of people and those types of actions. And so hopefully the regulators will take, I think, a gentle footing towards this, with the understanding that the technologies will create safeguards. And there are people working on creating those safeguards. At the same time, we certainly recognize that there needs to be a framework that's reliable and ideally global for moving these assets and creating value in the economy. And how Nadia and her colleagues around the world create that is something that we hope to have input to and provide insight for.
Well, we're going to ask her the question. I think you were saying that, yes, it should be regulated, but you're also saying at some point in time, not everything should be regulated. So my question to Nadia Manzari, Head of Payments of the CSSF, is what can be regulated, what cannot be regulated, what should be regulated, what should not be regulated? What's the regulator's view?
Okay, it's working like this. So first of all, as a regulator, I must say I'm really happy to hear that there is a will for regulation, because we took the decision in February that operators in virtual currencies or people who want to work with virtual currencies should be regulated. We consider virtual currencies being money, so we consider that people working with virtual currencies are doing financial activities. In Luxembourg, every financial activity has to be regulated, so a license has to be asked for kind of financial activity you want to do. We also agree that the currency in itself should not be regulated, but the operator have to be regulated, because the problems or the identification or the bad guys, we can identify there by regulating them. So that's our position. I think this is also a global trend, saying that in Europe now, I don't know if you have heard that it should be issued today or tomorrow, an opinion will come out highlighting the risks arising from virtual currencies, so which is a warning for the consumers, but also that there is a trend to get more regulation, to get more AML regulation. That's the first step they will take on the European level, saying that regulation will be inserted, or the requirement will be inserted in the AML4 directive saying at least a QIC should be done by these operators. We already a step far in Luxembourg saying that if you want to open an exchange platform in Luxembourg, the operator is regulated. So we are looking to controlling the financial flows at the operator, but we are not controlling or supervising the currency. So.
Thank you. Addressing a number of risks is certainly important. One of them has been mentioned, which is AML. We're going to talk about that in a minute. But first, my questions to John. Which other specific risks should be addressed other than everything which has to do with AML and with KYC, and how, against the very clear view of the regulator of what should be regulated, not should be regulated, how do we address these risks and how do we mitigate them? Probably through technology, but I wanted to hear your views on that.
Well, is it? Oh, yeah, we go. I'd like to get back to a point that I think that there's a real opportunity for regulatory innovation, and that there should be a form of experimentation to enable that, because I think the technology is changing very quickly, and you don't want to have regulation be a real inhibitor to the development of this market. I think that a lot of the thinking is still to look at a regulatory framework from taking the old techniques and applying to this new technology. And I think that would be disastrous, and that constitutes a major risk. I think that there's an opportunity to use the technology actually to mitigate risk. The fact that you're able to collect data, I mean, the work that we do and put it in a personal data store and you can encrypt it, and then you can verify certain attributes. So the more data you get through machine learning and et cetera like that is a way of not only sort of reducing risk and fraud, because actually you get better credentials so that you did it, but also making better services. But how that's done, the particulars how that's done, I think you're going to need to have some kind of willingness to do experiments, because I think the nature of the regulatory environment is absolutely critical to how this technology is going to flourish. And it can be used as a vehicle for stifling it, because the regulatory costs become very heavy, and then the incumbents will use that as a way to create a barrier to entry and insist upon that. Whereas I think I think there's a new framework that needs to be taken, and for example, what the digital credentials should be. In other words, can you use the device itself? Do you have to have physical credentials? How do you mitigate the risk? How do you manage the risk? Rather than insist on a particular regulation or a set of attributes or documents.
You were talking about the incumbents. I'm not sure exactly who you meant by incumbents, but and you're also referring to the difficulty or to the risk of applying old techniques to new technology. We're fortunate to have a representative of the more traditional sector here around the table, and just wanted to make a little bit of publicity for Luxembourg Finance. They're having a conference on Wednesday morning, and the subject is why traditional financial actors should be interested in virtual currencies. And since we have Marc Hemmerling here, who represents the Luxembourgish Bankers Association, I wanted to ask him why traditional financial actors should be interested in virtual currencies.
Yeah, thank you. Maybe let me start taking a position about what has been said about regulation or not regulation. I would say that currently, and the experience of our previous, let's say, non-cash payment services or payment systems showed us we need some regulation. You need to have legal certainty or at least contractual certainty. So be it now self-regulation or regulation, so I agree there should be some regulation, but we would, as Jean-Loup already said, we like minimal regulation. So that's not only the opinion of the Luxembourg Bankers Association, but I'm sitting also in the European Banking Federation on Payment Systems Committee. There the people feel there's a need, but as we are not very happy of the amount of regulation, so it should be minimal. So that's that point. Now coming to your question is why should we have an interest in these new, let's say, technologies, new solutions, is the following. It's quite easy. We discovered today that in certain use cases, our current payment systems or instruments are no longer adequate. So there are new use cases where people are trying to pay or to do transactions where our current systems are no longer adequate. So that's certainly one point why we should take a close look to these new opportunities and adopt for banks also such solutions, be it now as an actor or in cooperation with some actor. So that's certainly a way to explore. Then the second point we see is, of course, this great risk of disintermediation. Of course, if the money flows out from a bank to, let's say, an e-wallet or to bitcoins, the bank is losing what has been said yesterday, enormous data. We are losing the information on the habits of our customers. We do not see what he's doing. We are not able to cross-sell other products. So that will be certainly also an argument to keep the foot in this step. And then, of course, it's also about business opportunities. And the only example, or I may give you, which bankers should always keep in mind, 60 years ago or 65 years ago, there was a guy who imagined a new payment system, a diners club. It started with, I don't know, 20 merchants and 200 people. And today we have, I don't know, many billion of cards in the world. Well, of course, this system comes now to limits, and we should learn about on these stories. So that's also about business opportunities.
So what people are telling us that banks are reluctant is not true.
At least I may confirm we have currently working groups in Europe and also here in Luxembourg where we are, let's say, monitoring for the moment the evolution. And of course, it's up to each bank to find its strategy. It's not the ABBL which will tell you you have to use it, but each bank has to see, does it fit in my picture? Does it fill the needs of my customers? And of course, I would say we have opened it. And maybe the last word is, for my own association, we are called Bankers Association, but we are an open association. We are not limited to banks. We have payments institutions, e-money institutions, so we see that the whole world is changing. So we are also open to, let's say, Bitcoin or virtual currency operators.
I wanted to touch, because time is flying, one specific subject and probably discuss it with John and Karin before doing a final round with the four others. Some of you were mentioning AML KYC. Now we know that we have rules for non-face-to-face KYCs, but this is going to happen at some point in time at a large scale. So how can we address that in tomorrow's world? What solutions do we have? What technologies can we use? And I don't know who wants to start, John or Karin, whomever.
Okay, I'll kick it off. And this is something that we're really, really interested in. And there's a lot of work being done, actually at MIT in the Media Lab, at this new institute that's set up, and also through a nonprofit, but other people are doing it. And that is being able to take a combination of behavioral metrics off the phone. In other words, what you do, who you interact with, and a combination of biometrics that create a unique signature that verifies who your core identity is. And there's a group called the Jericho Forum, which is a collection of security officers around the world saying, what's the way, how do we deal with core identity and how do we deal with identities that build on that, what they call personas. And I think if you put it in a risk format and you say, well, what are the risks? And how do we mitigate those risks? And how do we develop a set of credentials that can be proven to be rigorous to a certain level of risk, that we know who we're dealing with, that we can have a certain persona that may be a banking persona that can be verified for certain kind of attributes, and we can recover, if need be, the underlying physical identity. That we create an infrastructure that allows rapid enrollment. In one of my slides, I showed an example of this little company that has access to 3.5 billion accounts. I really believe that the mobile phone is the device, and that's where the future is. And if you're going to have financial inclusion, we're doing a lot of in meetings with people in the Treasury that's very interested about this, because if the transfers are not very large, they're small transfers. If you can validate that, you create people, give them some equity, they come into the world markets and they can participate. So it's very important. And so I think that technology is there. I think what you have to do is have a series of experiments. I mean, you have sort of performance-based regulations. You provide certain safe harbor provisions that to be able to roll these things in. It's not something you're going to establish all at once.
Karin?
Well, just a few thoughts, partly in response to what John is saying. The work that he's doing at MIT Media Lab is so exciting and impressive. And I do think something along the lines that he's doing is going to be the key to a vast amount of financial inclusion that is part of the promise of these technologies. So it's just really exciting to hear more about your work. I also wanted to point to something that I believe is part of the technology that you're using, and it's also something that we're working with at Ripple Labs on the identity front, which is giving people individualized control over the data that relates to their identity. And yesterday I was talking about kind of creeping risks of not embracing technological change. And one of the things that is quite concerning to me, and we see almost every week examples of, is people's personal details being hacked into. And we all know that, I know myself, my personal details are in many, many databases all over the internet that have varying levels of security around them and you know, are vulnerable. So to the extent that the regulatory community is willing to begin to look into heightened security around personal details, I would think that individualized, cryptographically secured files is would be a really good avenue for experimentation and investigation.
Thank you for adding in the aspect relating to security. And since time is flying, I'm going to do a final round with the four of you. I'm going to ask Stan and Michael from an international point of view, and Nadia and Marc probably more from a European or national point of view. Taking up on the question there, where will we be in 10 years' time? Will virtual currencies have replaced legal tender? Will they exist alongside? What is your prediction? Where will we be in 10 years, and what will those guys discuss that will be here in 10 years? And how will you look back on what we've been discussing today? Maybe Michael first, and then Stan. Short statements, gentlemen, please, because we're already out of time.
Okay, so I'll try to do it short. As I mentioned before, the future is already here, so it's just not well distributed. I think that we will see digital currencies being used for microtransactions on the internet in a huge scale. I also think that we will see that we have settlements in different banks run much faster in networks similar to Ripple, something like that, perhaps Ripple even. What will it be discussing in 10 years from now? I think still they will be discussing how to keep identity safe for people. I think that's one of the hard things.
And how many currencies will we have in 10 years' time, Stan?
Well, we already have something like 3,000 just on the Bitcoin. But I think the future around these is sort of what Michael was saying. I think they will become integrated. I certainly don't think that the major sovereign currencies have anything to worry about, because they're already positioning these assets to fit in and to become exchangeable. So I think in another 10 years, you're going to see a vast array of value exchange forms, and not all of them will be or need to be regulated the way that we regulate banks or money today. And I think a big point of it is going to be about the gateway, like where does it exchange to and from fiat? And that's the point where you want to look at regulation. If you're in an asset, if you're in your virtual apples, in your gaming system, et cetera, probably not a focus for a regulator. But the ability to use the internet as a means of regulating what's happening is the big opportunity. And creating those structures and providing autonomy for individuals, along with transparency, I think will be really valuable.
You've been bringing in an important aspect, which is legal tender versus virtual currencies, or legal tender and virtual currencies. If you read between the lines of what the European Central Bank currently says, is they're virtually saying, it's my interpretation, but they're virtually saying that as long as this has not a substantial economic weight, they're not going to get involved in this, which means that at some point in time, they may come in as well, and that's going to be another interesting subject. Where will we be in 10 years' time in Luxembourg, in Europe? What will be the framework? Maybe Nadia first, and then Marc to conclude.
I think with every innovation I have seen personally over the last few years, and my experience in the banking sector, is that us with payment services and e-money, in 10 years, some of those protocols will have succeeded and will have had success. maybe as a use of mean of micropayments, but I also consider that it might be an opportunity for banks to have new payment systems in place, to transfer maybe money faster. I think personally that might be a chance. To answer on your questions about will it replace the actual means of payments? No, I don't think so. I think it will coexist with the actual means of payments. It will coexist with the means of payments we will see come up in the next 10 years, because I consider that's not the end with the virtual currencies, and it's not the last innovation in payments we will see. So I think, yeah, the best will succeed and the best solutions will survive, and it will be an additional means, an additional tool for the banks, maybe also for the consumer to do payments, to transfer funds faster, cheaper. Yeah, that's what I consider it being the future. To react on John is that what we can see actually, or what I can see actually at the regulators level, at European and national one, is that there is no will to apply the old classical banking regulation on these new means of payments, because we are completely aware of that it would maybe be the end for such a technological evolution. And that's why I think everybody is a little bit following the sector, trying to work with the sector and trying to find out what is the best way to regulate it. Some member states took the first reaction saying it now fits, your model are fitting somehow in the existing models, but also at the European level, I think there is a will to follow the market, to see how the evolution is, and to maybe find a specific regulation. That's why one of the reasons I consider that there has no been definite consent at this level, because we are aware of that there should be maybe a new regulation. That's my personal view, and also the global feeling I get from the regulator side at this time. So.
Thank you very much. Final statement from the traditional but innovative banker.
Thanks. Well, I would say there will be a coexistence, and the uptake will still last some years for different reasons. First is what Nadia just mentioned, and I welcome your position, or those of the European regulators, is that we are looking for a modern regulation, not an old which will be adapted, but a new one which is adapted to the new technologies. But on the other side, we must not forget, even if people are today technophile, we have in payment systems, you need, there must be a Swiss confiance. You must trust systems. And there we need a lot of, how to say, elements that still have to be tuned, or let's say standardized, like online know your customer or other mechanisms, identification mechanisms. And these still have to be worked out and spread out, and that will take some time. And then finally there's a third dimension, which is the business model. All you as operators, you want to live. People who are using now these new technologies expect that everything is for free, but somewhere there will be electricity to be paid and amortizations, and that is also a challenge. And I will say coexistence, yes, but it will take some years before we have a significant take-up. Thank you
very much, Marc. Thank you to all of you. The only problem we're seriously lagging behind the schedule. I wanted to thank all of the speakers for your insight. I hope we have been able to add a little bit more clarity, and if we confused you more than you were already confused before, we do hope that you are confused now at a much higher level. Thank you very much.